All things considered, the markets were actually fairly calm this week, despite what was going on between Russia and Ukraine. In the portfolio this week, I closed one position for a profit and opened two new trades. Before we check them out, if you enjoy watching me trade my real portfolio with real numbers every week, please like the video and consider subscribing to the channel. Thank you very much. First, my price target got hit on my Clorox trade. Exactly 1 month ago, I sold the 135 put expiring on March 18th for $1.80, and on Friday it closed for 60 cents for a profit of $120, or 2/3 of the max profit. Best Buy is a new position. If you've been following the weekly portfolio review, you know that I was waiting for them to report on earnings on the 3rd of March before starting a new trade. Well, they reported a massive dividend increase of 26%, which sent the stock jumping up 7%, only to get downgraded on Friday and then drop 5%. With all that volatility, it entered a put ratio spread and bought one of these $95 puts and sold two of these $92.50 puts and received a total credit of $1.93. So my risk here is being assigned 100 shares at $92.50. If I do get assigned at that price, the dividend yield on Best Buy would be 3.8%, which is pretty good, so I'm quite happy with this trade. J&J is still here as part of Project Booster. If you look at J&J's performance year to date, it's basically gone nowhere. But in this portfolio, I've collected $686, and it's currently trading at $137, which means we're sitting on a profit of $549. This is one of the strengths of selling options, being able to make a profit even when the stock is down, which wouldn't be possible if someone just bought the stock outright. I'll be leaving this trade as it is, unless we get a move down back to the $165 area, which will inflate premiums and may present an opportunity to roll this out to April. Up next is a new trade in Realty Income. I sold the $62.50 put expiring on April 14th for $1.10. It's currently trading at 80 cents and has 40 days to go, so it stays put. Moving on to the one trade that's in the red, which is StarBucks. Currently trading around $90, which is right where my March 18th $90 put is. This trade really could go either way, and I don't want to roll early and then have to hold on to a position for another month. As long as this stays above $88, I'm going to leave it on and see how it plays out. SCHD once again is a stock I'm trying to get assigned on. I sold the $74 put expiring on March 18 for 90 cents. It's currently trading at 35 cents and I will leave this be. It will either expire worthless and I collect the full premium, or the stock drops below $74 and I get assigned on the position. In TXN, we have another ratio spread, but unfortunately the stock has not dropped down to the level where the embedded put spread will start to show a profit. With 13 days to go, this will be another trade that will be left all the way to expiry. It was put on for $129, currently trading at 56 cents, and we're sitting on a $73 profit. If this does not go down to $160, we're going to collect all of the $129 profit right here. Finally, we have Walgreens, which got a bit of a move up on Thursday and Friday, but still not enough to establish a covered call. As much as I would like to start a new trade here, they do have earnings coming up on the 30th of March, which means I can't put on a trade in the April cycle unless I want to hold it through earnings, which I don't. Unless we get any significant price movement, the plan is to hold this put until it expires, and then wait for earnings and trade whichever direction it moves after earnings. If it moves down, we'll sell a put. If it moves up, we'll sell a call. That's it for this week. Thanks as always for watching. I will catch you in next week's video. Until then, take care and invest safely.